Let's bring in our next guest, Chris Conway from the Australian Stock Report, into the conversation. You've heard what we're just talking about. Rudy mentioned the art of the deal. Trump in North Dakota saying they're going to come to us. They're going to come and say, hey, let's work it out, and we'll work it out. It's very simple. It's the art of the deal.
Good afternoon, team. Yeah, look, I would say, I think the term at the moment, for me at least anyway, is that markets are off balance, and they're off balance because of all of these conflicting things that Trump continues to say and tweet. Even in that rundown that you were just talking about, Nadine, he was saying we didn't start it, but we will end it. And then in the very next breath, he's saying they'll come to us and we'll figure it out. So, you know, which is it? Ultimately, I don't know. I don't think anyone really knows. And whilst this uncertainty continues, you know, markets don't like uncertainty. So, you know, I can't see us rallying particularly higher. What I would say, though, of late, the Aussie market has actually held up pretty well.
Yeah.
So, you know, there's the trade war issues, but also we've got yuan weakness in China and potentially a slowdown in China. We've got quantitative easing turning into quantitative tightening. So there's a whole raft of factors. Obviously, the trade war, in quotation marks, gets the most headlines, but there are other factors and we're actually going okay. So I like this resilience from the Aussie market.
What do you put this resilience down to, Chris?
Very good question. So look, you know, obviously we've got two major sectors here just by weight in terms of commodities and banks. And again, when you were talking about us being up earlier in the rundown, you were saying that, you know, commodities linked plays were doing well and the banks were at least holding steady. So when you get those two sectors performing as they have been, with the banks at least very much of late, then generally we'll do well.
Mm-hmm. So who's buying our banks, Rudy?
I'm not buying. I don't think, to be honest, I mean, I don't want to spoil anyone's party here, but I don't think we should draw too many conclusions from these final days of the half year, quarter and the month.
Yeah, I was going to ask.
I think wait 2 more weeks and I think we get a much more clear picture where markets want to go. I wouldn't be surprised if we see weakness in the first 2 weeks of July.
All right. And July, Rudy, is often a fairly quiet time. I mean, not only is the Northern Hemisphere summer upon us, but we've got school holidays here in Australia. As you mentioned, we're end of financial year. We're also on the cusp of earnings season picking up in August.
Well, hopefully, yes. We've seen quite some profit warnings coming through, but so far, they're either from companies of which we know they're not faring very well, or they're quite small. Most people would not even have heard about those companies. So at the moment we're doing okay locally, but I wouldn't be surprised if we see some more admissions in July that maybe some guidances were a little bit too rosy in Australia.
And where, Chris, if you had to pick those companies that we might see revised guidance from, you know, is there a particular area of the market that you see as particularly prone to perhaps some of those confessions coming through?
There's one company in particular that I'll be watching very closely, probably because I've been wrong on it recently, but it's Domino's Pizza. They had a 20% NPAT target and they didn't make the rate in the first half of the financial year, and we're going to have to pedal very, very hard in the back half of the financial year to make that guidance. So I'll be watching very closely. Obviously the share price has been rallying of late, so the market hasn't cared what I've thought. It's just gone up anyway, but that's one that, yeah, if they miss, I think there is quite a lot of expectation built into that share price, and it could be another, you know, a third strike for Don May. So I'd be looking there. But just on the positive side, you know, obviously looking for materials plays to continue to do well. They were the best sector, if you will, of reporting season last time out. You would think they'd have the best earnings growth again this time around.
Yeah, and would this potentially, Rudy, in your view, for the resources plays be the last hurrah? I mean, if you think that we could see an escalation of this trade, whatever we want to call it, weighing on global growth and in particular China?
You would think that instinctively, but that's not necessarily correct, because one of the reasons why commodities, not all of them, but a whole series of commodities is holding up better this year around is also because of supply constraints. And those supply constraints, one would assume, they stay in place regardless of what happens on the trade or demand side. So commodities may not necessarily be a one-on-one exposure here to global risk appetite, but obviously we'll have to find out when when the proverbial hits the fan.
Yeah, there's not a lot of corporate news out today. When you look around the place, there, Chris Conway at Australian Stock Report. We do, though, have AMP in the wake of, further court action being brought against it, or court action being brought against it by ASIC, hitting those 15-year lows. I mean, we do get questions from viewers as to whether it's worthwhile putting some money in AMP because of potentially a value proposition. No comment, Rudy. Chris, how do you view AMP?
I have read the same research that probably you guys have as well, and yeah, there are some analysts out there on the street talking about it being value. My response to that as a trader is a broken clock is right twice a day. For me, the trend is down. The company has problems, so if I was going to be doing anything with this stock, I would be on the short side of it. So, yeah, sorry for those long-term value people out there that are looking for me to say that it's showing something. For me, it's just not at all.
Okay, so what are you trading at this stage of the game, Chris?
So there's a couple of stocks that we like at the moment. One is James Hardie, and the other is Amcor. Now, of course, both of these have exposure in the US, significant exposures in the US, and will benefit from a stronger greenback. So, input prices obviously come down and they can expand their margins. So James Hardie's more focused on obviously housing, cement fibres. They have a plant in Texas, and it's really the southern part of America where building approvals have been the strongest. Building approvals above about a million starts each month is positive for the sector. And last month in May, they had 1.35 million housing starts in the US. So that's one we like there. The other, of course, Amcor. There's been consolidation in the sector. Growth in US GDP really drives packaging and demand for packaging in the US, and we've seen that of late. They have risen prices recently as well, and because they've risen prices at the same time when demand's picking up, it means in the second half they should be able to expand their margins. So, like I said, just a couple there playing that US theme.
All right. Now, just finally, I know that we've talked about the relative outperformance of the Australian market looking pretty good at this stage of the game. I mean, technically, Chris Conway from the Australian Stock Report, 62.10, 62.11 almost. I mean, how are we sort of looking on a technical level?
I think we're looking good. As I said earlier, I think the bulls have done quite well to hold this market up in the face of some headwinds, and that shows to me an underlying strength there. Do we get back above 62.50? Again, probably not without a catalyst, but the downside risk is at 61.50. As I said to you earlier in the week, Nadine, if we slip back down below that level where we're sort of right back where we started, and had been struggling for months to get over. So, we're sort of at a tipping point, if you will, at a critical point in the market. The previous trend has been bullish, so again, I'm a trend trader. I don't fight the trend, but I think, again, as to what Rudy was saying earlier, there'll be a lull during July, and then, we really ramp up in August, and that's the perfect cut through. We cut through all this external noise, we cut through all this trade war noise, we cut through everything, and we just understand very, very clearly exactly how the Australian corporate landscape looks and how companies are performing, and that will be the big driver.
All right, Chris Conway, it was a pleasure. Thank you. Have a good afternoon. Good day's
Thanks, guys.
trade.
Cheers.
Chris Conway, Australian Stock Report.